Right, what's up YouTube? This is going to be a trade recap of the trade I took yesterday on NVDA stocks, US equities. So let's get into it. Basically, the higher time frame was telling us that we're clearly bullish, right? Clearly bullish, disrespecting SEBIs, respecting for bullish for value gaps, and we had buy side liquidity resting above us. Even though we haven't swept those highs yet, but my bias coming into the day was bullish. So market opens at 7:30, right? My local time, 7:30 market opens, goes up, makes these relative equal highs, comes back down, sweeps this low. And another thing is we have a 4-hour fair value gap right here, but inside of that 4-hour fair value gap we have a 5-minute fair value gap resting exactly at the equilibrium of this range. This 0.5 is equilibrium of this range, exactly resting in that fair value gap. So this was a high probability area for price to reverse. And the one thing I'm really happy about is, first of all, we came down, we took this low. I was basically expecting price to tap into this fair value gap and then reverse. But the thing I'm very happy about is that I waited for this 5-minute candle to properly close. As you can see, we went through the gap but did not close, right? That's the important thing. In order for us to inverse this gap, we need to close, but we did not close. I'm very happy that I stayed patient and waited for the candle closure. But if I didn't wait for the candle closure, I would have probably gone and stopped out, right? Probably would have gone and stopped out. But yeah, I waited for the candle closure. We respected the gap, then came back down again, swept this low, had internal manipulation, internal low was taken, tapped into the equilibrium, tapped into the 5-minute fair value gap, and after that, we saw clear displacement to the upside. This was, by the way, this was the 10 a.m. open, right? The 10 a.m. open is basically on the future side of the market. 10 a.m. open, 10 a.m. is basically the open of a 4-hour fair value gap. 4-hour candle, right? It's the open of a 4-hour candle, and on the equity side, it's the open of a 1-hour candle. And if you're bullish, what you want to see is 10 a.m. open, come down, make a low, then go back up again. Why? Because what's a bullish candle like, right? Let's see, what's a bullish candle like? Open, low, high, close, right? So for us to be bullish, this pattern or this formation needs to form, right? The candle should be like this. So that's exactly what happened. The 1-hour candle, the 1-hour candle, the 1-hour candle ended up being bullish, right? Just as I expected, and price came down. After the 10 a.m. candle, price came down, made the low, then went back up again, made the high, then closed. So we had clear change in state. We had a 3-minute inversion. We had a 1-minute inversion. Also, we had a 3-minute inversion. Basically, I did not really consider this 3-minute inversion because it was small, and because I already saw displacement, right? I already saw what I wanted to see. We were in area which I expected price to reverse. We had swept this low, clear displacement to the upside, change in state, 1-minute inverse, also a 3-minute inverse, and we had, the most important thing is we had a 15-minute fair value gap, untapped 15-minute fair value gap resting above us, which was this. This 15-minute fair value gap was my target. Initially, I was expecting price to go take these equal highs, but it was already too late in the AM session, and I just wanted to take my piece of the pie, the low-hanging fruit, and get off the charts, right? So as you can see, came back down again. We did consolidate a bit near the change in state, and that's another thing I've noticed is if we consolidate near the change in state, that's that shouldn't really be a worrying factor. It can potentially just mean that smart money is accumulating orders, and whenever this happens, and if your bias is correct, whenever this happens, it usually follows up with a huge displacement price action, like strong price action. So yes, this was basically the trade I took. Simple as that. Took the low hanging fruit, and if I did hold, I probably would have gone stopped out either ways. So took my low hanging fruit, took the highest probability price target, and won the trade. Also, we're currently respecting this 1 to 0 -1 to -1.5 range, which is acting as resistance. So I was clearly not wanting to hold to these equal highs. Just took my piece of the pie, got off the charts, simple trade, and that's it. So hope you guys learned something out of the trade. I know I do yap a lot, but I hope that you got the lessons out of this trade. Right? Thank you so much for watching.